subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
धुन कोई ऐसी बजाऊं,
कुछ तो फैक्ट्स टेबल पे लाओ।
Hey, 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 Mrs. K, there's some magic in your coffee today. Hey, 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 Mrs. K, there's some magic in your coffee today.
लाइफ का हर रंग अनजाना है, कॉफी का तो बस एक बहाना है।
कॉफी का तो बस एक बहाना है, कॉफी का तो बस एक बहाना।
So some more queries and some more questions related to gift over a cup of coffee.
Sure.
The question Neel had for you in regard to the tax liability for NRIs receiving a gift from India in the US or any other country of their residence.
Well, Chami, this is the other side of the coin. Now, when you receive a gift from India in the United States, let us be very clear that not just in the US, practically in almost all tax systems of the world, you know, the basic concept is that whatever you receive as gift is treated as being in the nature of a capital receipt. So the win-win situation is that in India, it is the recipient who has to pay tax,
Okay.
but in the US, it is the giver.
Okay.
Or even in UK or in most of the countries where there is a gift tax, it is the giver who has to pay the tax.
Okay.
So, you know, in case of Neel's question, you know, if say an Indian father or mother is sending a gift to his son or daughter who is settled in the US, well, the daughter or son need not worry, because this will be treated as a gift, not liable to tax.
Okay.
And for this purpose, you have to keep in mind that if the value of the gift is more than 100,000 US dollars, so you know, when the income tax return is to be filed in Form 1040, along with that there is a Form 3520, where if you have received a gift from abroad which is valued at more than 100,000 US dollars, then you have to give the details of that gift. That's all. Otherwise, there is no tax as such.
Okay.
Another interesting aspect which we also need to explain to Neel, Chami, and many NRIs like them, is that, you know, when they send gifts like what we were talking last time, that when an NRI is sending a gift to, say, close relatives in India, the recipient, the close relative, doesn't have to pay any tax. It's completely exempt. But as far as the remitter of the gift, the NRI in the US is concerned, you know, if there is a basic exemption limit in the US, 16,000 US dollars per donee.
Okay.
And in the US, they have the calendar year
Okay.
as their tax year. Here we have the financial year.
year.
So, in a calendar year, an NRI or any person who is a resident in the US for that purpose can give gifts of up to $16,000 or less to any persons, one or more. They may be relatives, non-relatives, not an issue. In case you are giving beyond this amount, so say for example the NRI is sending a gift of say $50,000 to a father or mother in India, you will need to declare this along with the filing of your Form 1040 in Form 709, because in the US they don't have gift tax, but these gifts beyond 16,000 US dollars, they eat away into your lifetime inheritance tax exemption limit, which runs into a few $1,000,000. But to ensure that people don't make large gifts during their lifetime just with a view to escape their inheritance tax liability, therefore if anything more than 16,000, it has to be reported, and that is in the record of IRS. So this is about the gifts for an NRI within the US, receiving or giving.
I want to ask you a small question in
Sure.
this regard. My neighbor wants to remit a gift of $5,000 to his friend's son on his graduation in the US. When the recipient of the gift is a non-resident and a non-relative, are there any special tax implications in this regard?
I think you've asked a very interesting question. In fact, Chami, prior to 5th of July 2019, this was, you may say, a loophole,
Okay.
in a sense that under the Indian law, when you give this gift of more than 50,000, if you give it to a person who is a resident, obviously he has to pay tax, if the gift is more than 50,000 and he does not come within the specified list of exemptions. But when you are giving a gift to a non-resident, and as you said, a non-relative, now such a gift at that point of time was not within the scope of income tax at all.
Okay.
Because what would happen, the person who is giving the gift doesn't have to pay any tax.
Yes.
The person who is receiving the gift is a non-resident, and the non-resident is receiving it outside India, is not liable to pay tax in respect of any income, even if you treat it as income earned outside India. So this was a loophole by which the government felt, the finance ministry felt, the CBDT felt that there is a lot of leakage of revenue, because you would give a gift to anybody for any reason, and that just because it is given outside India would not attract any tax. So the budget which was presented on 5th of July 2019, on that very day from 12 in the midnight, the law changed, and it said that if anybody gives such a gift to a person outside India, it obviously a gift is treated as income within 56(2), but under the provisions of section 9, which deal with remittances to non-residents which are deemed to be income and which attract tax liability within India, it was provided by an amendment in section 9 that such income which is income within the scope of 56(2) will attract the deeming provisions of section 9, by virtue of which it will be treated as income taxable in India, and the provisions of section 195 which are in relation to tax deduction at source, TDS, in the case of any remittances to non-resident would also get attracted. So what happens in this case, when your neighbor is sending these $5,000 outside India, well, in the United States, obviously this 5,000 is not going to be taxed. But when you are sending this, you will under section 195 be required to deduct 30% tax at source and deposit it with the government. So what will happen? You want to send 5,000, send it. But then $1,500 you have to part with that share, 30% to the income tax department. So this has to be kept in mind. Of course, logically all exemptions under 56(2) will also apply.
Okay.
Say for example, any person resident in India is sending gifts to close relatives. Obviously, this will not attract. Similarly, the other exemptions which we saw will also come into play. So, you will need to keep that in mind.
Okay, it was very insightful, and I will tell my neighbor to wait until his friend's son's wedding and give him a gift on a wedding occasion.
Absolutely, because when you do that, the wedding occasion will come within the scope of the provisions of section 56 to 10 exemption. Similarly, if you want to give something to a non-relative, well, you can also do that under your will. So, all the exemptions that we saw earlier, that when you want to get out of the trap of the relative rule or those specified gifts rule, then you can do some smart, insightful planning with that.
Wow. Well, that brings us to a point that how much foreign currency is permitted by RBI to a resident for remitting gifts to an NRI during a financial year?
Very important question too. Chami, we need to explain to both Neel and Riya and to so many of our NRI viewers, and in fact because these gifts would be sent from India to their relatives, who are the close relatives who are sending such gifts. There was a point of time when in fact even if you had to send $1 to an NRI, you needed permission of the Reserve Bank of India. I am talking of the pre-liberalization era, prior to 1991. Now over these past 30 years, there has been so much of liberalization, and today in fact we have what we call as LRS, a Liberalised Remittance Scheme by the Reserve Bank of India, as per which any resident Indian, including a minor, can remit overseas in a financial year, and financial year as we know is April to March, a sum of $250,000 US or equivalent, Chami, in any other foreign currencies. $250,000 is the base benchmark. So if it is in Canada, Australia, UK, equivalent foreign currency to that amount can be sent every financial year. The only thing you have to keep in mind is that the LRS covers not just these gifts, but also covers what the individual spends for his own purposes like travel, etc. So if for example during a year I have utilized say $20,000 out of my travel quota or some other purposes, the balance that I can send for such purposes would be $230,000.
Well, the information about LRS should prove really very useful to the close relatives of NRI. However, is it true that some tax is collected out of such LRS remittance overseas?
Well, Chami, we need to understand the provisions of section 206C, which again came to be amended a couple of years ago. See, in fact, earlier this $250,000 US per financial year, the limit under the Liberalised Remittance Scheme. Whenever a remittance was sent overseas, it was considered to be a capital remittance, and therefore no tax was either deducted or collected out of that. But then the Income Tax Department felt that with a view to track, the source of the fund that goes into the LRS remittances, it is important that there is some TCS, just like you purchase a car, above the value of 10 lakhs of rupees, there is a 1% TCS. Now here, under section 206C, the tax collected at source or TCS rule is that if you are sending a remittance of more than 7 lakhs of rupees during a financial year, in the aggregate, the moment you step up that 7 lakhs limit, then you have to deduct means the bank which allows you to make the remittance will collect at source. It will deduct from your remittance 5%, and that will appear to your credit under 206C
Okay.
as TCS. So suppose you want to send 100,000, to your close relative there in the US. Actually, the bank will collect 5,000 out of that, 5,000 equivalent dollars, and keep it to your credit. 95,000 will go as the remittance.
Okay.
And obviously, please keep in mind, we need to explain our viewers also that this TCS is not a tax that the government wants to permanently keep. It is only collected at source
Okay.
with a view to track that amount. So when you file your income tax return, you can take credit for this TCS.
Okay.
But against your PAN, the department will be able to also give you a notice for scrutiny and ask you the source. So the relatives in India have to ensure that when they are sending these remittances, in fact, they should not be surprised or shocked if the bank deducts 5% in respect of remittances above 7 lakhs. And what they need to keep in mind, this is a word of caution for all relatives, please be sure that the source of the remittance that you are making overseas is explainable, because otherwise, while the gift may be exempt, you may get into trouble as far as the source is concerned. And Chami, if a person is not able to explain the source, it can attract lot of complications.
A lot.
So I think these aspects in relation to the remittance of gifts will certainly be useful for both Neel and Riya.
Definitely.
Thanks a lot, Mukesh sir. You have shared such valuable information and offered us practical guidance and tips. Not only us, but all NRIs and their relatives watching this show will truly benefit from the insight and advice on gifts as a big, big gift from you.
Well, you are welcome, and thanks once again for the lovely dinner and coffee that we had. See you again.